Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 18th of May to the 22nd of May 2020. As always, what we're going to do is we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we were actually looking further declines to the downside, and we actually corrected to the upside here. And this was because we had this big standard deviation move when the stock market crashed, followed by a coiling pattern. This is a failure to make higher highs and a failure to make lower lows at the same time. We just start to coil like this. And we did have a breakout to the downside. It looked like in this battle between the Fed trying to devalue the dollar against global demand for the dollar, pushing it to higher prices, it did look like the Fed were actually starting to prevail with this break to the downside. And what we wanted to see was a pullback and a sell-off, which we got. However, last week we failed to continue down, and this was actually a failure to make a new low last week. And the US dollar, as a result, has corrected back into this coiling pattern on that reversal last week. So very simply put, going into this week, we go into this week with a neutral bias on the US dollar. That is to say, we don't have a strong bias one way or the other. And when we have a neutral bias on the US dollar, what this means is when we go through the markets, we trade them on their own merits. That is to say, the way they are currently structured, without a strong bias in the dollar one way or the other. So next market we're going to look at is crude oil. Now, last week we had highlighted the 19.29 as an area to look for a pullback in crude oil over the last couple of videos, and that was right about here. And you can see last week we did come and test this a number of times, and this was an area we were looking for a reversal to the downside. We did not get any reversals in this area. In fact, quite the opposite. We had what's known as an ascending triangle, which is in fact a buy setup. Now, you don't have to buy this if it's in a downtrend, but this certainly is not indicative of any reversal. And we started to break above the 19.29, and we have actually now reversed in oil to the upside. So very simply put, going into this week, what we'd like to look for is we'd like to focus on bullish setups in crude oil. If we can get a pullback, and especially if we can come back and retest broken resistance turning support, which would be the top of this ascending triangle pattern here, as well as previous broken support and resistance from the past. This would be a great place going into next week if we can get this kind of a pullback to start to look for bullish setups. And if we get the right kind of price action in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 24.95. So the next market we're going to look at is euro dollar. Now, last week we highlighted the 1.0850 as a key area of support, broken resistance, looking to turn to support. And we highlighted this as an area to look for a potential bounce to the upside, a reversal to the upside in euro dollar. We have held this key area of support despite the fact the US dollar index reversed back into that coiling pattern to the upside last week. What we'd like to see then is going into this week, we are still focused primarily, as we have not reversed in the euro dollar, we have not broken to the downside. We are still focused on bullish setups in this market. What we would like to see, though, before we get involved in any trades in this pair, especially as we're in this coiling pattern, you get this kind of corrective market and we get involved somewhere in this area, becomes very choppy, can actually become difficult to trade. What we would like to see, therefore, in euro dollar going into next week before we start to look for bullish setups is a break of this previous high over here, which takes us out of this coiling pattern at the 1.08960, and any rally to the upside and a break of this high is going to give us an opportunity to look for bullish setups in this market. And if we get this kind of price action, we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 1.1052. So we are still focused primarily on bullish setups in this market next week, but we need to see that added confirmation. We need to see a rally taking out this high first before we start to consider any long positions. So if we do not get that break to the upside next week in this market, we will just simply not trade this pair. And it's important to remember that we are actually going through these markets to wait for good setups next week which appear in them. We are not looking to trade every single market. We are only looking to trade the markets that set up with good risk to reward opportunities next week. So next market we're going to look at is pound dollar. Now, last week we had a reversal to the downside in pound dollar just as that US dollar index bounced from the lows. It had that false breakout to the downside and reversed back inside the coiling pattern. We had this reversal to the downside in pound dollar. This is actually a new reversal in an overall downtrend, so this could actually be the start of a bigger move to the downside in pound dollar. Going into next week, what we'd like to see, therefore, is any pullback in this area, because we don't like to sell at the lows. Any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of setups in this market going into next week, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.1974. So the next market we're going to look at is US dollar Japanese yen. Last week we had this reversal to the upside in the US dollar Japanese yen, and this looks now to be forming a potential inverse head and shoulders. What we'd like to see, therefore, going into this week is any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this area, which simply we're talking about when we're looking at bullish and bearish setups, we're really looking at breakouts in the direction of the overall trend. So any pullback in this area and a breakout to the upside is going to be viewed as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 108.20. So next market we're going to look at is Aussie dollar. Now last week we were looking for a pullback in Aussie dollar for further advances to the upside. We are still structured to the upside in Aussie dollar despite this recent strengthening of the dollar last week. Simply put, going into this week, we are now looking for further advances in this market, but what we need to see first, as always, is we need to see a reversal pattern in this area. We do not, as it stands, have any reversal to the upside. You can see we're still in the very near term in the intraday here trending to the downside. So any reversal in this area is going to be viewed as an opportunity to start to look for bullish setups, and we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at 0.6582. So the next market we're going to look at is New Zealand dollar. Now last week we had a reversal to the downside. We had this failure to make a new high followed by a break lower. This is actually a near-term reversal. We were actually looking for further advances in this market last week. What we wanted to see was we started the week up in this area and we want to see a pullback down towards the 0.60050, which was right about here. And a pullback, which we did get into this area, we were then looking for, and we go through this each week. I draw this on here for you guys so you know what we're looking for. We are looking for a breakout to the upside. You can see there is no breakout here. I think some people still get confused about this. Just because the market pulls back, we are looking for breakouts. We are looking for bullish patterns or bearish patterns, which are these breakouts in the direction of the trend towards these targets. If price pulls back and it just continues to trend to the downside and there's no break to the upside, we do not trade these. We just wait for the reversal and then we look to trade it in the opposite direction. So very simply put, going into this week, now we've had that reversal to the downside. What we'd like to see is any pullback in this area to previous broken support, looking to turn resistance to the 0.60930. This is going to be viewed as an opportunity to start to look for bearish setups. We're going to start to look for a reversal to the downside. And if we get that kind of a reversal to the downside, that is going to be the opportunity to start to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 0.5739. So two things to remember when we're looking at these markets, guys, is one, we do not trade every single market every week. Two, we are looking for setups in these markets which break in the direction of the overall trend. And if they don't do that, like this happened last week, we do not trade them. We just wait, we let the markets reverse, and then we trade them in the opposite direction. So I hope that helps anybody who's confused about how we're actually using these week in, week out. So the next market we're going to look at is US dollar Swiss franc. Now last week you highlighted the key area of resistance at 0.97470, and we have actually held this area. And going into this week, we are still looking for further declines as a result to the downside. What we'd like to see is in this area, we'd like to see a breakout to the downside. This is a great place to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 0.9589. So next market we're going to look at is US dollar CAD. Now US dollar CAD, with that break back inside the coiling pattern last week in the dollar index, has also started to coil once again. You can see we have a lower high and we also have a higher low. So we're failing once again to make highs and lows. We are sitting at the top of this coiling pattern though. The bottom of it is down in this area if I were to draw this on here. So what we'd like to see going into next week, especially as we're sitting at a key area of resistance as well at the 1.40990, this becomes a good place next week to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set of the 1.3850. And last but not least, we have gold. Now, last week we came very close to achieving the target set at 1763.05. We were looking for further advances to the upside, and we have started to break out of this coiling pattern in gold. You can see a number of the markets have been coiling recently because of that corrective nature of the dollar index. However, gold has started to break to the upside, and going into this week, because we haven't achieved the target just yet, this is great because any pullback in this area this week is going to be viewed as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 1763.05. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2, at the 1797.40. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and want to wish you all a profitable week next week. The only thing left to say is take care, and don't forget to trade safely.